5 tips for rehabbing houses if you're a real estate investor. Welcome to this week's REI Weekly Lesson. I'm your host, Greg Helbeck, and on this channel, I teach you how to be a successful real estate investor if you're brand new or if you're experienced. Hopefully, some of these tips and tricks can help you be even more successful and grow your business even bigger. If you're not familiar with me, I've been a full-time real estate investor now for almost 10 years. I've done well over 200 properties. Everything you hear from me is going to be real world experience. This is not regurgitated theory out of a book. So if you do get value from this video, you can do me a favor and subscribe to the channel and also share the podcast to some friends. So let's get into it. 5 tips for rehabbing houses. So first of all, I'm talking about buying a house, putting in some sort of construction, and then selling it on the retail market. If you're not doing any work whatsoever, if you're literally buying a house and then selling it and doing zero work, some of these things won't apply. This is for basically fix and flipping, right? Whether it's a big rehab or a smaller rehab, anytime you're dealing with contractors and selling to retail buyers, these are what these tips are going to be most applicable for. So tip number 1, get inside the property. Obviously, you'd think that's common sense, but you'd be surprised. Some people never send anyone out to that property and they never get pictures and they make assumptions. And sometimes if you're buying bank-owned properties, you can't get inside. But just because you might not be able to get inside doesn't mean someone can't go inside on your behalf before you end up closing. Like, you can make offers sight unseen, you can assume the worst and hope for the best. But before you actually start having a contractor swing a hammer, you got to get inside that property, because I'm telling you right now, a 15-minute property walkthrough could give you so much information that you can use to be more successful on that project. For me, for example, I don't necessarily need to go to a lot of the houses. I live in Washington State, and most of my business is back in New York. However, if they're local and they're in Washington, of course I'll go. If they're in New York, I send someone to the property to look at it on my behalf and take pictures and give me the skinny, whether that's a real estate agent, a friend of mine, contractor. I always get someone inside before I close. And by getting inside, you can really see all the nooks and crannies of that property. Because a lot of times people think the deal makes sense just strictly going off of the numbers, but maybe they never went inside and they didn't realize that one of the bedrooms is a railroad bedroom, which means that you have to go through one bedroom to get to the other bedroom, which is a huge value detraction. Maybe they didn't realize that it was next to a cemetery or it was next to a landfill or something. It's going to drop the value of that property, and you can't rely on Zillow or Redfin to tell you that. Now, if you're wholesaling houses, on a side note, you don't need to ever go there because you're selling it to somebody else. So as long as your buyer goes there or someone goes there on behalf of your buyer, you should be fine. Number 2, be conservative on the numbers. This is insanely important. I see too many people nowadays in this market, they're over optimistic on their numbers. They think the house is going to sell for $550 when all the comparables support that it's going to sell for $500. You never want to make assumptions like that when you're flipping houses. You got to assume worst case scenario, realistic sales price numbers, realistic rehab numbers, right? So there's 2 numbers you got to be conservative on. Number 1, be conservative on the rehab number, which means you got to assume it's going to cost more to fix up. And then number 2 is you got to be conservative on the resale price, which means it's going to maybe sell for less than what you think. I was literally looking at a property today, and the ARV could very well be $525. However, I want to be conservative with the numbers. And I'm like, let's pretend this house sells for $500, and we're making our offer to the seller based on the property selling for $500. Now, if it sells for $525 after the fact, great. That's awesome, extra money. But you got to be conservative with those numbers. And the same thing with the rehab. I said, I could probably do that rehab for $130,000, but I'm going to do my numbers based on this needing $150,000. So here's the takeaway. Assume it's going to cost more and assume it's going to sell for less. If you have that mindset, more often than not, you'll make money in this business. The 3rd lesson, vet your contractors and don't let them get ahead of you. I'm going to define that. What does that mean? I'll start with the second part. Don't let them get ahead of you when you're rehabbing. That just means don't pay them more money than you owe them if they haven't done the work. So an example of that would be, let's say your job is going to cost $50,000. And let's say in theory, it's a 5-part rehab. So the logical thing to do is you pay them in 5 installments. Upon work getting completed, you pay them more money. But what rookies do is they give a contractor like $30,000 up front. And now that contractor already has the money from the client, in this case, the investor, and they could take their sweet time because they already got paid 3/5 of the job. So don't let them get ahead of you. Be transparent and communicate clearly in writing with your contractors when they're going to get paid. What milestone are they going to get paid their next installment on? Because it keeps both parties accountable. When they do the work that they said they were going to do, you're obligated to pay them, And you want to vet the contractors. That's the first part of this lesson, is you got to make sure they're legitimate. You got to make sure these guys have license and insurance. Because if a contractor works on your job and they don't have insurance and one of their subs gets hurt, they're going to sue you and you're screwed as the owner. So you got to be really careful with that. Make them show you a copy of their license. Make sure they have workers' compensation. There's some counties where you don't need to be a licensed contractor to do work, so you just can use insurance. But there's other areas where you need to deal with a licensed contractor. And here's the thing, if they have a license and insurance, they're probably going to cost more. Trust me, it's worth it. You don't want to work with a Chuck in a truck, Randy the handyman. You could be in trouble. Vet them out. Ask their previous clients for references. Look them up on social media. Do they have legitimate equipment? Do they have vans with their company name on it? Another thing you can do, just as a free kind of tip here, is sign a scope of work with them. If they're not willing to sign a scope of work on DocuSign that states the budget, the timeline, how they're going to get paid, if they're not willing to do that, definitely don't want to work with them because they're going to screw you over. Another thing you want to do if you're dealing with contractors, and this is more of an accounting thing, but if they don't have a corporation, so if they have like a sole proprietorship or an LLC that's taxed as a sole proprietorship, you need to make sure they sign a W-9, because if they don't sign a W-9, you can't write them off. Fourth tip for being successful when you're flipping houses, rehabbing houses, is use a good agent. Don't deal with someone who's never sold a house before because you like them or they cold called you. Work with agents who understand the market, who actually know what they're doing. I'm telling you right now, when you have a good agent to represent you when you're listing your house to sell it, when it's renovated, it's going to make all the difference. A really good agent is good at communication. They're good at marketing. They have resources to market your property. They're not just taking pictures with their iPhone. They're hiring a professional company to take pictures. They're hiring a drone to do a 360 view. They're getting a full virtual tour of the property. They work on the weekends. They answer their phone. So get a really good real estate agent to sell your property and don't just hire some random schmuck to sell it. Now, I'll tell you the truth. A lot of the times when you're selling houses and you're flipping, if it's priced right and it's a good product and there's no inventory, kind of sells itself. But I'm telling you right now, having a good agent and paying that commission is worth every penny. And then the fifth lesson, I think this is the most important one. This actually can tie to all the other ones. Don't get emotional. Not your house. You're not living there. You're buying it. It's a piece of inventory. You're selling it. So make your decisions based off of logic. Don't get emotional. Look at the numbers. Look at the terms. Look at what you're going to net. Be very logical with all of these steps when it comes to selling the house. I'll give you an example. Let's say you bought a project and you think you're going to make $50,000. That's a reasonable profit to make when you're flipping houses. And that's what you emotionally want to achieve. You have this house on the market for 3 weeks. You don't get the offers you think, which means you probably missed one of the steps I mentioned earlier. And all these offers keep coming in like $20,000 under what you want. The emotional person, the emotional house flipper who doesn't understand reality will just say, no, I'm holding off till I get $50,000. And I'll tell you what, that probably won't happen. Within 2 or 3 weeks, you kind of know where you're at with a house. And if you're getting offers and they're $20,000 less than what you want, and you get multiple offers like that, odds are you're going to have to just accept the fact that you're going to make 30 instead of 50. And don't get emotional. Make the logical decision. Sell the house, make the money, move on to the next project. So let me just summarize all these and then I'll end the video. Number 1, get inside the property. Number 2, be conservative with your numbers on the resale value. Think it sells for less. On the rehab cost. Third lesson, vet your contractors and don't let them get ahead of you. Number 4, use a really good real estate agent. And number 5, don't get emotional. If you follow these 5 steps, there's a very good chance you're going to make more money more often flipping houses. If you break these rules, you can get yourself in trouble sometimes. There's no perfect deal. If you do enough deals, you'll probably lose money eventually. It happens to everybody. But follow these 5 steps and it will increase your odds of success. If you have a house and it's in the Hudson Valley, Seattle, Reno, San Diego, or Delaware, and you want to wholesale it to me, I am a legitimate buyer. I'd love to buy it. Or if you want to just JV a wholesale deal, we can wholesale it together. If you want to do a deal with me, send me an email, Greg@VelocityHouseBuyers, and I'll see you on the next REI Weekly Lesson.